Welcome everyone to the INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday the 26th of April. Well, we're going to see today that markets have carried on where they left off last week really on forex. That dollar downside trend continues, euro dollar continues higher, dollar yen continues lower. But there are some signs elsewhere that these recent trends are starting to consolidate a little bit, certainly in commodity markets, and I'll show you a chart on silver that would show that, and also on equity markets as well. There are some ranging signals that we have through those markets, but also equally the Wall Street continues to be the stronger play there. Now, in terms of data points to drive markets out of these moves, we've got the German IFO numbers there this morning, which are expected to improve, and also the US durable goods data this afternoon, also expected to show some decent improvement there. And further out tomorrow, we've got the Bank of Japan and the US consumer confidence data. Now, at the end of this video, I'm going to be talking and showing you the INFINOX support and resistance table to give you some levels for your trading. Now, with regards to charts I'm looking at today, we've got dollar yen in front of the Bank of Japan. As I said, still trading lower, and there are signs of maybe a bit of a slowing, and I'll show you on the chart on that in a bit. Looking also at the silver chart, again, signs that the rally and the recovery that we've seen in silver and gold, to be honest, but also silver, is starting to slow a little bit. I'll talk about the levels that you need to be looking out for there. And finally, the S&P 500, which is knocking on the door of all-time highs again, as these equities just pick up slightly from Friday. And I'll talk about technical implications for that chart. So let's have a look at all these markets. So onto the INFINOX MT5 platform now. I'm just starting off with dollar yen. We can see that dollar yen has been trending lower, lots and lots of negative candles all throughout the last 2 or 3 weeks in a row, and it continues to fall away today. Another negative candle to the downside ever since we broke down below 108.35. That was a key downside break for me because it changed the trend, and I've been talking about a retreat back towards the 106.50 to 107 area, this next purple area, and you can see that momentum is negative there on the daily chart. However, looking on the 4-hour chart, there is a slight, and a very slight sign of slowing downside momentum, with that slight positive divergence with the RSI, the relative strength index, on the 4-hour chart. However, the market does continue to trend lower, and it does still seem as though that resistance is building and ever further overhead. And you've got the latest reaction low, latest reaction high at 108.15, underneath 108.20, which is underneath 108.35. So continued negative factor there, but you need to see that for a slowing and a stalling and maybe a recovery, you'd need to see the 4-hour RSI above 50, and at the moment that's not playing out that way. So initial support 107.45. And onto this silver chart, we've seen the recovery, and it's into resistance, hitting around 26.60 area of resistance, and it's just stalled in the last couple of sessions, fallen back on Thursday and Friday, and just holding ground today. There is still this air of recovery on the silver chart, but similar with the gold chart, in the fact that silver's just started to fall over a little bit, and momentum on the RSI on the 4-hour chart is just turning a little bit more corrective, certainly ranging, falling under 50 and holding now under 50 on the 4-hour chart. So there is just a sign that maybe the market is stalling around that 26.60. Now 25.60 is the first line of support that you'd need to see. If that gets broken to the downside, you are certainly beginning to look more as though that this is falling back again. But certainly for now, I think it's just holding ground, but there are signs of a stalling and a falling over maybe. And onto the S&P 500. Well, it's very strong. It is the outperforming play of the of markets. Certainly, Wall Street is strong. Wall Street equities are very strong still. Now, there've been a lot of choppy candles actually in the last few sessions, which, if I go onto the 4-hour chart, I did FTSE 100 on Friday, and I talked about a prospective head and shoulders top, and you can see that there is the element of that here, but it's rallied on Friday and really is now testing all-time highs again. But these momentum indicators with that arguable topping area has just started to be less positive. So there are signs. I still think there is the prospect of a correction on the S&P 500, but it's just holding up at the moment, and it certainly looks as though it's still testing higher. And the potential for this correction isn't coming through yet, and 41,100 is clearly, 4,100 is clearly the key line of support on that. But there are a few signs. I'm still looking at these equity markets thinking that they are possibly topping, but not yet on S&P 500. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Wednesday. We'll be looking at the Federal Reserve monetary policy meeting that is that evening, and the impact that that could have across markets. So I will leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.